Test. Hey, welcome everybody to the 40 Finance channel. Doing a SmileDirectClub stock analysis live on the show today. And I just wanted to kind of come out. I've gotten a few questions on this because it is a holding that I own. My current cost basis is $7.74, something like that. We'll take a look at all that stuff in a second. But SmileDirect came out yesterday. The earnings call wasn't like horrible, but the headlines are horrible. And the fact of the matter is that they came in very slightly under the expectation. And furthermore, they cannot seem to get any momentum to the positive side. So in this quarter alone, they had a cyber attack that affected revenues. They're still reeling from COVID, not only for their locations in the United States, but also for international, which is a big part of what they're targeting. International COVID store limitations, if you will, have been a problem, and that's a big part of the expansion. And then they also had a shooting in one of their warehouses here in America. So, and a couple people passed away, unfortunately. And, thoughts and prayers with those folks. But it just is just a never-ending negative momentum train for SmileDirect. The stock right now sits at $5.36. When I bought this one back in August, would have been mid-August, almost 1 year ago, it was in the $7 range. It had taken a huge hit for a lot of the reasons I already described, with COVID pushing back doctor's appointments, things like that. Man, I thought it was a no-brainer that this was going to be a company that bounced back strong in 2021, and they really haven't. They really haven't. In fact, they've done better, a lot better than last year from a revenue standpoint. But if you look back to their 2019 numbers heading through December, they were really on a strong upward trajectory to kind of reach their long-term goals. So what I thought was an easy double-up stock has turned into not so much. Not the case. And so on this video, we're going to go through a couple things. I'm going to share what my position is, and I'm going to show you the things that I'm considering. Should I sell this stock now, take the loss, walk away, or should I reinvest it? Or should I double down, so to speak, at $5+ and see if I can get my money back? So those are the things that I'm thinking about. But first, let's take a quick look at the fundamentals. And I just want to say hi to everybody who's on the live chat. I don't normally do individual stock analysis live, but for this particular afternoon, I don't have time to edit a video, so I'm just going to roll with this. And we'll see how it goes. So thanks to everybody who's joining. All right. So I'm going to transition here. Here's your SmileDirect, where we are today. $5.36. This is your 1 year chart. Looking back to last year, I bought in here at the $7.50 mark. Things were going great. You got to $12, $13 in December, and even in February, $12.50. So I could have cashed out anywhere in here and made money. As most of you know, I try to hold on to stocks for at least a year. Helps a little bit with capital gains. And quite frankly, with SmileDirect, I didn't see any reason to sell because things should have been going further up in the future with the COVID situation getting better. Now, of course, what we've seen in their past few earnings reports is just, negative momentum is the easiest way to put it. On the analysis side, so the last earnings report was, actually, let me give you that date here. It was August 9th, so that was 2 days ago. It was after earnings, so if you want to, or after the market closed. Give it a couple days here for analysts to upgrade before I start talking about it like I always do. So you see where we're at today. A year ago was minus 71 cents. Basically an abysmal year, mostly because in the SmileDirect world, they still, while they can ship you aligners, they still recommend that you go see one of their partner dentists just to make sure you get the best molding, the best plan, etc., etc. So while this is telehealth, while this is e-commerce, there is still a physical element to it, and what they found over time is that physical presence in dentist's office, in their smile shops, has really boosted conversion. So that's why they do that. Unfortunately, in the midst of figuring that out, we had COVID, which shut down those plans. If they hit analyst estimates, they'll still be down about 50 cents in negative EPS. Next year, if analysts are correct, they'll bump up to negative 16 cents, negative 16 cents. So this is not a profitable company, which is definitely a ding on stocks that I normally invest in. But here's the attraction point, and these numbers have come down considerably since I bought the stock. But you got plus 26% on revenue. This year, 656 to 833. Next year, you got another 25%. And quite frankly, 2023, assuming they get stuff back in gear, that would be expected to go up even more, probably getting closer to that 30% clip if they can resume normal operations. All right, so let's take a look at how future earnings estimates look for the valuation of this company. All right, and it gets a little bit tricky because it's not a profitable company, but we'll look at EPS just real quick. If analysts hit their numbers, which is, you know, a little bit of a dartboard for sure, but let's just say we get to 20, if you bought today at $5, we get to December of 2023, the projection for that fiscal year is minus 5 cents, consensus, right? So somewhere in the neighborhood of June of next year, maybe closer to September, you're going to have most analysts flipping their view towards this almost profitable point, right? And then you start to get into full profitability in 2024, which would then put your PE at 254. Now, that's a long way away, and this isn't really an EPS stock. So let's look at our revenue numbers. Fiscal period ending this year, if they hit on 784, which is a little lower than what Yahoo had, that would be plus 20%. Forward price sales under 1, okay? Under 1. If you're wondering about Align Technologies, which makes the Invisalign braces, their price of sales is in the neighborhood of 10x, 9x, 10x, all right? December of 2022, which we can start thinking about with this one, heading into the fourth quarter. Approximately 20% growth again on revenue. Forward price to sales drops to 0.63. So the cost of revenue, and this doesn't calculate debt and whatnot, which we'll get into in a minute, is very cheap right now. And frankly, it was very cheap at $750 or whatever I owned it at. So from a valuation perspective, this is far from a high-flying tech stock that is overvalued. What you have here is a company that is, I would say, like fundamentally a good value, with the exception perhaps of their debt standing. But you have a company now that is not really showing the momentum yet, right? So you could potentially be buying negative news momentum, even though the growth is technically there. Everyone's projecting growth. There's nobody who's projecting no growth for SmileDirect. The problem is it's not coming in quite as fast as we thought. All right, let's take a look. DH, how you doing, man? SmileDirect, let's go to our balance sheet just so you guys know what's going on here. Income statement, so $725 million over the last 12 months. Decent. Cash on hand is about $375 million. Long-term debt, $770 million. So in my book, from an eyeball perspective, anytime your debt is getting, larger than your trailing 12 months revenue, then you're starting to get into a little bit of a shell game where you have to cover your butt in some circumstances when bills come due. Not saying that's happening for SmileDirect. I'm just saying they're getting close to that world, and we'd have to read more about what they're doing with debt offerings to really say. But just know that it is inching closer to a line where they're going to have to start taking out more loans, issuing more shares, do something like that. There are no plans for that right now. So that's going to hold down your fundamental valuation, absolutely for sure. But don't forget, we're under a 1 here for price to sales. Now, cash, $376 million. To me, without knowing the ins and outs, they've got enough cash to pay the bills and to continue to market. Now, over here, the other thing you should be aware of, if you're interested in this stock, is it carries a very, very high short percentage of float, 27%. That is so in the old days, aka 18 months ago, a short percentage this high is always going to hold you back in terms of how much momentum you can get in a stock. Now, in today's world, obviously with the Reddits and the coverage of short percentage being in such bigger detail, what we're seeing is perhaps, and I have no knowledge of this whatsoever, perhaps this is attractive to short squeezers since that has become such a fun game. I don't know, but I would say that, you have your random bull case that SDC gets picked up by the short squeezers, and maybe something happens with it. So, but I don't think you can really count on that, but it could happen, I suppose, certainly in today's age. All right, so that's a little bit of the background. Now I'm going to share with you, I typed this up because it's hard for me to remember everything when I'm talking. Let me get it in a better view here. Some sort of viewing view. Okay. All right. SmileDirect today, my holdings. I have 300 shares at $7.64. That's worth $22.92. That's a loss today at this point of $717. Yeah, not the worst thing in the world. Should I double down? Should I double down or just wait? Well, here's the case. I could add 200 shares. It's about the most I'd do is add another grand to this one. At $5.26, when I was typing this, the stock price was $5.26. It's now $5.39. That would cost me $10.52, and that would give me a new cost basis of $6.68 per share. $6.68, the new cost basis, times 500 total shares, because I had 3, I added 2, there's your 500, equals $3,300 worth of an investment. That's how much money is out of my wallet. The value of it, of course, would be lower because of what's happened to the initial shares, and then be $26.30. All right, so if I did that, let's just say right now, then if SDC hits $10 by this time, that says 21, this should be 22. If SDC hits $10 by 8/11/22, then I will have realized a 49% gain in 12 months. 49% gain on my total investment, not the value. The value from today would actually be higher, but I'd get about a 49% investment on this. So you figure 3,340, divided by 2 is $1,700 some odd dollars. So that's where the 49% comes in. Alternatively, or in addition to that, I could sell covered options. And if, depending on how that goes, I could make more income there. This is not something I typically do. In fact, I've never done that. So I'd have to read a little bit about that to see what I think. But at 500 shares, I could make a couple bucks that way, and it might be worth it. I'll have to learn more about it before I would say. All right, so that's the scenario if it hits 10, which I think is pretty fair in a year. Don't forget, a year from now, they don't necessarily have to be rocking and rolling, okay? But a year from now, can they say that our momentum, will they point to financial figures that suggest the momentum to resume 30% growth in the years ahead? If that starts to turn positive, the market's always looking ahead. The $10 a share isn't out of the realm. Last year, or we looked at this already. Last year at this time, you had some 10, 11, 12s, even a 15 in there when the market was super hot. So I don't think $10 a share is a huge ask when you consider their price to sales. All right, scenario 2 is sell out today, take a loss of $717, reinvest $1,560 in DraftKings, which would be my next hub. SDC sits on the riskier side of my portfolio. It would be replaced by another risk. So I run a barbell, right? I run things that I believe in, have very little risk, and then I have another set of stocks that are riskier, Palantir, DraftKings, SDC, la-da-da. So I would be inclined to buy DraftKings today, just to use an example. So I would buy $1,500 of DraftKings at $52. That equals 30 shares. And if DraftKings were to hit $80, you know what? I'm going to fix this right now. I kept putting 2021, but these should all be 2022. So if DraftKings hit $80 by this time next year, so apples to apples on the time frame, then, and by the way, I think that can happen. I'll do a DraftKings video probably tomorrow because I'm very excited about some of the stuff they have going on. And it's a momentum stock, and it'll be easy for them to hit momentum, certainly during football season. So assume DraftKings hits $80 on this reinvestment, 30 shares plus a 53% gain from today's price of $52. That would be an $840 win for me just on these 30 shares. Subtract the initial SDC loss, right? I lost $717 by selling out directly, then that's only a gain of $100, right? And that's assuming this, which is fundamentally doesn't happen, right? DraftKings doesn't have EPS. Their price of sales is through the roof. This is me just assuming their momentum gets them to 80. I would also get a small tax loss offset to go with this $123, but it would be I wouldn't even know what that would equal until it got closer to tax time, and my guess is it'd be about a let's just call it 20% of $700. Maybe it's another $140 tops. So call it $250 if I did this. All right, so those, in my opinion, are the options based on what I'm going to do. And the more I stare at this, the more I'm like, hey, this company is reeling right now. Do I believe that they can recover by this time next year? And would I put another $1,000 in? And when you put the numbers together like this and you put a price target on it of $10 by 8/11/22 and you say plus 49% gain, I do not have a stock in my portfolio, maybe Sabre, but I have enough Sabre. I don't want any more Sabre. And so I don't have a lot of options for plus 49%. Now, some of you investing will have small caps and in pharmacy stocks and biotechs that could easily go up, 200% if you're going to be day trading and whatnot. But from a long-term standpoint, there's not a lot of options I see over the next 12 months that offer plus 49%, a reasonable plus 49%, right? Now we could wake up and Amazon launches something and my Amazon stock goes up 50%. I would say very unlikely, and I'm bullish on Amazon, but I'd still say very unlikely. So I'm kind of on this game where like I'm going to read through the SmileDirect earnings report one more time and just kind of gather my thoughts and try to figure out, is this company able to turn the ship around? Most of the stuff that's happened to them has not been for poor product, okay? It has not been a product problem. If you look at I was looking at their earnings report earlier. Let me see if I can fix this a little bit. One of the things that I like about SmileDirect, you should look at their earnings report if you're ever interested in them. And it doesn't matter which quarter you pick. They are focused on doing things the right way. And I want to get to the review side. Hopefully I'm getting there. Gross margin. Here we go. So this is reviews. I'm going to try to pull this out a little bit. So bear with me here. All right. So the perception of SDC and Google Trustpilot reviews, they're doing very well. This is small telehealth comparables, so companies that have taken SDC's idea basically and tried to form their own. This is a European outfit. I forget what they're called, but it's DSO is the acronym. And you can see perception on brand credibility over time. So SDC has had some problems in the past, 42%. Now you're going up to 68%. Invisalign, they're saying, is at 72%. Invisalign is more expensive, and it obviously requires a bigger commitment, right? You can't just rip the things off your mouth. So I think SDC is doing the right stuff as far as getting into customer satisfaction, which is something that they've ignored. So we'll have to see, but look through that earnings report. And the other thing I'm going to say about SmileDirect, which I think is probably in their favor, and that is that I'm not sure that COVID has actually went away enough for people to get back into the aligner game. I did some trend searches for Invisalign, for SDC, braces, clear aligners. There's bounce back from 2019, there's bounce back from 2020, but those trend searches aren't showing full-scale 2019 volume yet. So the market right now, the market isn't Google Trends, but it certainly helps to give us a look at it. The market, I don't think, has recovered fully. So it's really leaning towards me saying this. SDC, super duper disappointing. On the bright side, I still think that there's a game here, but it is taking a lot longer than I anticipated. We will see if I buy back in, but that's the way I'm leaning. That's the way I'm leaning today. So hopefully that helps. And since I'm doing this live, we got a couple questions. I'm going to go through those now. But let me know what you guys think of SDC. DH bought Moderna at $4.90. So I'm going to turn my attention to other stocks and those who are nice enough to join. I know that Moderna's been in the press, so I don't buy much in the neighborhood of medicine or pharmacy or biotech. So you bought at 490, and this one tanked a little. All right, let's try to figure out what happened. Oh, okay, August 9th. So you bought, oh, darn. Okay, well, sorry, DH. 490, will it go back up? Let's see. Earnings date is Halloween-ish. EPS of $8. I'm surprised it doesn't have a dividend, but anyway. P ratio 44 right now. Forward PE of 20. It's not too far off at 375. Price to sales at 28. That's running lower. You got a chance. You got a chance here. The problem for me is I don't know enough about medicine to tell you what their full bull case is. $600 million for debt, $8 billion in cash, so that looks good. Balance sheet looks good. Short percentage of float, pretty small at 5%. Granted, that was back on July 15th. Let's take a look over at Seeking Alpha. The one thing about Seeking Alpha that I like a little bit better when we're looking at earnings estimates is how low can the fundamentals grow with the company. So your forward PE right now is actually 15. Seeking Alpha sometimes, I would say even oftentimes, does a better job. But it looks like this is just EPS takes a couple negative hits. Let's see how sales are looking. Well, there's a little bit of concern here, just to be totally honest. If these analyst projections are true, or they turn out to be sort of true, you have you have a chance here to have negative revenue next year. Negative to the comp, right? Now they're still going to make $19 billion, but that's off 5% from this year's estimate. And then for some reason in December 23, the call is for only 10.6 billion, and that's half. So I would say the long-term outlook, at least from an analyst perspective, is not very bright, and stocks can really from a fundamental standpoint, stocks can really hit some tough times when the earnings have a negative outlook, right, going down. So let's flip that with SDC, which inherently is a much smaller company and doesn't have near the track record of success as Moderna. If you wanted to stack those two stocks together from a long-term fundamental basis, it'll take SDC time, but their price to sales, right, is going down over time. Their earnings per share is going up over time, whereas Moderna's, the analysts are projecting that it could go down. That's tough. But you never know. How's your chart these days? Oh boy. So you're trending pretty hot, man. But you know, this is, if it's a trading stock, it won't even show very well up here. So you're way above the 50-day. And you got an RSI of 69, 72. That's not as hot as it has been. Just be careful. Just be careful and hope you keep getting good news. Lou, are you still looking at Zillow? Yeah, so Lou, it did go under 100 today. And I'm thinking about ZG instead of Z. No other reason than it's, I think it has voting rights. It's a slightly better equity profile, I believe, from what I was studying. And it bounced up to 101. I saw it, though. I know exactly what you're talking about. So right here, lunchtime for me anyway, $98. Very interesting. With Zillow, I just don't know how much farther it's going to go under 100, quite honestly. They're going to be positive EPS this year, $1.05. And then this revenue growth, now this 65% for this year is basically assumed in the stock price, right? But next year's 43%, which could inevitably go higher. Yeah. And you know what? It's Zillow Group at 101, Z at 98. Z is still at 98. I just noticed that. But anyway, thinking about it, Lou, I'm still interested. Share your idea about Amazon. Just did a long video on Amazon maybe a week ago. Short version is my price target is about $4,300, somewhere in the time of January, February, when they release the full year earnings. Screw college. Check out BNTX. They are a better deal than Moderna, both down 18%. So that would be for DH, BNTX. Ali says I have 60% up and EXPR is waiting for 8. I don't know what EXPR is. Express, the retail company, down 3% today. If I was up $60 in a brick and mortar retail company, if I was up 60%, I would probably cash out. But I don't know anything about this stock. But you've got negative EPS, sales. So look at this, sales this year 56%, next year less than double digits. Yeah, I would probably take my money. You might miss a buck or two, but geez, the fundamentals could take a hit next year. Let me just put it that way. All right, Patrick. Hey, Jeff. Haven't heard you talk about TSM. I'm getting ready to do a TSM video, which is why. What are your thoughts moving forward? It has been flat. I think that, unfortunately for TSM, they're a good company. Things are going to be awesome in the long term, but they ran up in February and came down with the rest of the market, but they just don't grow at enough pace to get past this 115 mark. So if we look at their statistics from an annual basis, try to squeeze this in. So forward PE of 29, okay? 29 at the end of last year. Historically, 22 was the high, 16, 15. So these manufacturers don't typically have a forward PE this high, and I think that's why it's running flat. So I don't think the company itself is in trouble. You've got great revenue growth for the next 2 years, but I think what you're seeing with TSM is perhaps more bullish news needed to push the stock over. They don't have an earnings date. I was trying to see if they reported early. But that's my take on it. I'm still bullish. I'm still holding. They also have a decent chunk of dividends. 1.53% works out to, says $1.78 over 12 months. So I'm still holding TSM. I have absolutely zero plans to sell. But I think they need to have more bullish news to push this one past this rut that it's in. And frankly, in the semiconductor space, I think bullish news is like is almost any day away, right? Not necessarily for TSM, but semis are getting so much coverage right now. All right. Let's see. Been waiting on this one. Aaron Schill, he must be sitting in SDC with me. If you are, let me know what you're doing. Probably kick myself for doubling down on this one, but I am definitely thinking about it. And frankly, I mean, just to be super honest, if I do, and if I put in $3,300, which compared to what most people would buy that stock at, like big dogs, if it flops, it's not going to flop to zero. They have too much intellectual property. They have too much invested in warehouses and the stuff they're doing. They would sell to a company before they went to zero, right? Somebody else would just buy it, and so I don't know. I don't feel like I could lose a ton more money from $5, but we'll see. Anyhow, Aaron bought 2023 calls, strike price of $3. I mean, there's something in SDC right now. It depends on if it fits your risk appetite or not. But the bottom line is, like, if you're looking for $5 winners and you have time, like Aaron was touting there, if you have time, go do it. Like, there's something there. I think that has potential, but I am getting very tired of being disappointed by them. So I don't want you guys to think I'm painting some rosy picture with these knuckleheads, because you can't get out of their own way. I did not talk about Wix yet, but I was surprised. I thought Wix had a good thing going, and I thought that they were going to sort of end up being in the Shopify game. Not in the same way, but I thought that, they basically have monthly users, right? So I thought it'd be like a subscription revenue would have been a better way for me to describe what I was trying to say. But man, they tanked hard, and it's unfortunate. And that's mostly because of the future, customers' slow creation of websites. But they had an opportunity to do like a subscription compounding revenue stream if they could have kept bringing in new people. And now that's supposedly slowing, so things are going down a little bit. All right, guys. I'm Pratik 007. Hope you're doing okay. What were you doing on Magnite, adding, holding? So good question. I need to do a Magnite video, but I am holding. I thought it was an awesome report. I think that stock is another one that's run a little bit ahead of itself. Pubmatic just came out today, and they had today or yesterday, and they're in a similar, it's a comparable company, and they're having good earnings. I love Magnite for 5 years. Okay, that's what I think of it. Client list keeps growing. Let me bring this over here. Do I think that it goes $61? No, I don't. Not this year. Over time, though, I think it can get there, and I think it's a great connected TV play. And I think that if they get a little bit more momentum, it will potentially grow faster from this point forward than TTD, mostly because it's not as big. So we'll see. I mean, that was a bold statement I think I just threw out. But they've got plus 30% booked for next year, at least from analyst opinion. I think they beat that. I think this connected TV advertising, we're barely scratching the surface on it. So whether you like Trade Desk, Roku, I chose Magnite to sort of zig when others were zagging. We'll see if that was smart, but Pratik, I am holding strong. All right, guys, I gotta run. Thanks everybody for coming out. Let me know what you think of SDC, and I'll be popping back on, I'm sure, at some point again this week. Have a good day, everybody.